Then I'll buy Airbnb. Only $750 left, so I'll put the entire amount, place the trade, and I will get Airbnb. Please note that I have also been able to buy fractional shares, right? So you can see 4.65. Hi everyone, welcome to today's video. So today we are going to continue from our yesterday's video where we were talking about the US stock markets. I showed you which stocks I'm going to buy, or rather which stock I bought yesterday. And today I'm going to do 3 more investments in 3 different US stocks, and I will explain you the reasons why. So I'll do the entire fundamental and technical analysis and I will show you why am I making these investments. But before we jump into the video and I share with you which 3 stocks I'm talking about today, so let me cover some of the key questions that you had asked me yesterday. So many of you asked me that, hey Akshat, why are you investing in the US market? Have you lost faith in the Indian market? The answer is no. I'm very much bullish about the Indian market. In fact, I'm more bullish about the Indian market, and I will continue to make investments in the Indian market. Now then, why am I investing in the US market? Because my portfolio size is big now. I need to diversify. Therefore, US is one of the good options and therefore I'm investing it. That's one of the reasons. Second, more important reason is that I'm doing it from a learning perspective. If you read my commentary on different social media platforms, I always advocate that the best way to learn about stock market is that pick a little bit of money and invest. Then you automatically will follow news. You automatically will start following the companies. You will do a lot of analysis on those companies. These things will happen automatically. So you're putting yourself in a situation where you are forcing yourself to learn. So I am also doing the same with the US market, that I am making investments there so that I learn more about the US market. I can bring that knowledge and start contextualizing my investments in the Indian market also. So that is the second reason. Third, some of you ask me that, hey, is US market better than the Indian market? The answer is nothing like that. All the markets are good. There are always good opportunities to make money in the US market also, Indian market also. And to be honest, the Indian market, or any market for that matter, it is strongly interlinked with the US and European markets, and especially the US market. So that is one important point that you need to remember. And final point is that I am investing in the US market, but I'm investing in the US market for certain types of stocks. I'm doing it in a very methodical and thought out fashion, that in the US, when I'm trying to invest, I'm looking for global monopolies. That is the reason why I'm making investments in the US market and certain US stocks. So my goal is to find the next monopolies in the US. That is the intent with which I'm investing. And I'm going to invest 5 to 10% of my portfolio in US stocks. Now I know that many of you would want to just watch the summarized version of this video. So these are the 3 stocks that I'm buying. You can check me buying these stocks, and then I will give you a complete analysis. I would request that you stay till the end of the video to watch and understand all the analysis that I'm doing, because this same analysis can apply to Indian stocks also. So please watch the video till the very end, but if you just want to know the name of the stocks and see me making investments, watch this short clip, and I'm using the IND Money app to make these investments. So I'll buy Shopify next. This is the second stock that I'm buying. And I'm again going to buy $750 worth of stock, so $22.50 left in my account. $750, place trade, and done. So I have bought Shopify as well. Now I'll move on to the third stock, which is UiPath. So I'm going to buy this and I'm going to place an equal amount. So I buy UiPath for $750. I place the trade and done. It takes a little bit of time sometimes. Then finally, I'm going to buy my last stock in this tranche. This is Airbnb. So I'll search for Airbnb. Then I'll buy Airbnb. Only $750 left. So I'll put the entire amount, place the trade, and I will get Airbnb. Please note that I have also been able to buy fractional shares, right? So you can see 4.65 of Airbnb, and these are my US stocks. So the first company that I bought yesterday was Coinbase. You can check the video here. And now the second company that I've bought is called as Shopify. Now people who do not know Shopify, let me just quickly share my screen and let me just take you through their website. What do they essentially do? Let me give you a very brief synopsis of their business model. So now what is happening is that you might have observed yourself, many people are now interested in starting their own businesses. Now it has gotten easier than ever to start your own digital business. Okay, not physical business, digital business. It has become supremely easy to do it. All you need is a website. You need some kind of marketing, sales channel, and you are good to go. You can start selling any type of product, be it a course, be it like t-shirts, be it like paintings, be it like anything that you want to sell. You can do that. So essentially, what is Shopify trying to do? Shopify is trying to become an end-to-end platform, right? If you go on Shopify, open your account, and if you want to start your own small business, you can do that via Shopify. Shopify will take care of all the pain points that you will have as a business owner. Now you would ask me that, Akshat, okay, what are like some of the key pain points that you can talk about? So I have built multiple digital small businesses, so I understand this model really well. So a lot of pain points are there, right? One is that literally getting your website created, right? You will struggle even getting your website created. It's a lot of pain. Second is that you have to get payment integration done. You have to do that. Then you have to market the website, right? I mean, just because you have created a digital product, it's not as if that people will start flocking in that, hey, Akshat has started like a new website, go and check it out. That won't happen, right? So you need help with marketing. So you need to market that also. Then there are like bunch of operations related challenges, like the website is down, what to do? You have to ship your product. Then someone returns your product. What do you do then? How do you refund? So many headaches are there in terms of running a small business also. So Shopify becomes like a one-stop platform for you to solve this issue. Essentially, the pitch is sellers come, buyers come, they buy from each other. That it's a marketplace that allows you to solve a bunch of pain points that you have and kickstart your entrepreneurial journey. So that is the simple concept of Shopify. Now you would say that, Akshat, why are you so bullish? Can you show me the chart of Shopify, how it has progressed? I see that it was flat since 2015. It started $26, this, that, and now it's at $14.77, right? So massive growth already. You earlier said that you will not invest in Amazon, Apple, Google, all this, but now you're saying that you will invest in Shopify. So why? Okay, now here is the point, right? And this is a very important point for you to understand, and this has to do with the industry trend, right? Industry trend. Now there are certain reversible trends that have happened post the 2020 COVID, right? For example, people might use less technology, right? I mean, it's not at the peak of the coronavirus, probably people were doing like more Zoom calls, right? Now, as we move to a physical world, people will do more in-person meeting, right? I'm not saying that Zoom will shrink, right? It's not as if that Zoom will suddenly shut down. Nothing like that. Zoom has still gotten a lot of massive traction that will still continue. But let's say if 100 people were using Zoom in 2020-2021 period, probably 85-90 people will start using Zoom when we go to the physical world, right? So this is the best case scenario. Now with Shopify, the situation is slightly different. Now my hypothesis is, and this is my prognosis, I can be off like anyone else, just a quick disclaimer there. My hypothesis is that people who are looking to build small businesses, right, they will continue at the same rate, right? Or in fact, this rate will even go up after a few years. Because what is happening in the world is that now we have started to exist on different spectrums, right? So different spectrum means, and please hear me out here, this is a very important point, that previously what used to happen was that, for example, you would have observed that when your parents got a job at a bank, now that bank would have continued with their employees for 30, 35, 40 years, right? Till their entire career. Then same situation used to be there in the US also, that hey, if you get placed at like some major company like Ford, then people used to get done with their entire career at that Ford only. Now with so much stress in the corporate world, so much headache, so much churn, so much technology being thrown at you, you are not sure about your job anymore in the corporate world. So everyone, almost everyone is looking to start their small business, right? And guess what, right? Which is the leader in terms of helping you start your small business? It is by default Shopify. So this is a trend that will not go away. That is what my assumption is, that if you are holding this stock for like 10, 15, 20 years, and if this entire industry of creating small businesses grow, right, then Shopify or companies like Shopify will grow with it. Now the next argument that you will make against something like Shopify is that, hey Akshat, you know what, this sounds really interesting and probably you are making the right points, but what's stopping companies like Amazon, Google to start their own parallel businesses like Shopify? Glad you asked, and here is a very important paragraph that you can read from Wikipedia, and it said something like this, right? In September of 2015, Amazon.com announced it will be closing its Amazon Web Store service for merchants and had selected Shopify as a preferred migration provider. Shopify's share jumped by 20% upon the news. Now, it's not as if that companies like Amazon have not tried fighting against something like Shopify. But usually the trend is that if one company, for example, there was a company in the US called as Diapers.com, right? It became like so specialized niche in terms of selling diapers and baby related products that Amazon had to come in and acquire that company altogether, right? Same story might play out with Shopify also going forward, that if it becomes like really big, Amazon will either partner with it as it is doing now, or some big company might buy Shopify. On my last video on US stocks, I explained you the concept of J-curve, right? So J-curve, people who are just joining us, let me just quickly explain that topic again. So essentially, J-curve means that there is certain kind of adoption that happens in any technology, right? So there is like these periods like 2020 that, before that the company will have very limited users, then some tectonic event will happen. Now the user base will improve, right? And this leads to something called as network effect. For example, the same network effect was exhibited where? At Facebook, right? So when Facebook was at its peak, a lot of people were signing up for Facebook account. Now, if you are my friend and you are on Facebook and I'm not on Facebook, and 10 of my friends are on Facebook, guess what I'm going to do? I'll have to by default join Facebook if I have to stay in that social circle. So same situation happens that if you have a bunch of friends who are starting their small businesses, everyone is doing via Shopify. So you by default, if you're looking to start your own business, you will have to go to Shopify. So I hope this point is clear. And just as a final point here, if you're looking to invest in some company which is trying to become Shopify in India, name that company. I'll wait for like 5 seconds and I'll let you type out your answer. Please do type out your answer. It allows me to see what you're understanding from my video. So the question is that which company do you think in India is trying to become Shopify? So the right answer is Paytm, and more specifically Paytm Mall is trying to do something like that. It is trying to get a lot of merchants, a lot of small merchants to sign up on Paytm Mall, and they are trying to ramp up their merchant practice. I have made a separate case study on Paytm. You can take a look at it. But the difference between Shopify and Paytm is there are two major differences. So number one, Shopify is North America, Canada based business, and the nature of customers there are very different. It's very acceptable to buy things online and they have been doing it for years. That trend has picked up in India and it is going to continue to be that trend in India. That's A. Part B of their culture is that they are slightly more entrepreneurial. Again, please don't bring the nationalistic pride here. I'm just doing a complete rational analysis. So therefore, Shopify has gained a lot of strength in terms of churning that engine, right? So it's moving very fast, acquiring new customers, etc., etc. Second is, so given the nature of the business in North America and the culture there, what happens is that there is a lot of pull factor for Shopify, right? They don't have to go and push people to become entrepreneurs, so to say. People want to become entrepreneur. They're already learning it. They are just looking for a great medium to just get their entrepreneurial journey started. They land on Shopify and become a client, right? So there is a lot of pull factor with Shopify, which Paytm Mall does not have right now. Can it do it? I don't know. I'm not betting big on that as of now. But this was a good, interesting discussion between India and the US. Therefore, I brought it up. I hope you enjoyed that. Okay, now let me show you the next stock that I'm going to invest, and it is called as Path or UiPath. Now, some of you might not have heard of this company, so let me take you through the Wikipedia page there. So essentially, UiPath is a global software company. You will say, okay, software, another software company, but for RPA, which is Robotic Process Automation. Now, if you don't know the tech behind Robotic Process Automation, it simply means that you're using robots or bots to automate a lot of work. Now, if I have to give you an example, so in banks, there is a lot of front end and back end regular work, right? Like counting cash and bunch of different things, right? Now, if you can automate this by using robots or using softwares, that is where RPA comes into the picture, Robotic Process Automation. The world is increasingly moving towards this. You might have heard that in finance, that banks are getting more and more tech advanced. Why? Because they are using RPA. That's a very important technology. Now you would say, okay, you know what, technologies come and go, who cares? There is RPA, there will be BTA, CTA, whatever, like after 2 years, what's stopping this from growing, right? So this is a great article for you to read, and this is the forecast for the RPA industry. Now, this is how the RPA market has grown from 2016, right, to 2021. It's already growing, it's growing consistently, right? And the forecasts indicate that the market will grow at 32.8% CAGR. 32.8. Name one industry that is growing at that massive pace. Now, if this industry grows and if you're betting on a market leader in this industry, the share prices will grow as well. So let me quickly take you through the financials of UiPath. So here are the key financials, and you will see that it got listed very recently, right? And we don't have a lot of historic data, but you can see that it has been able to grow its revenue, its gross profit has increased. So look from right to left when you're looking at US stocks through this website. So the revenues have gone up, the profits have gone up, right? And net income is still in loss, right? That is the reason why you are seeing that the stock price got listed at approximately like $69-70, and now it is trading below that. Okay, now you would say that, yeah, Akshat, this looks risky. This seems like a very risky company, not making profit. Can you explain why that is the case? Yes, now you might very well understand that, hey, RPA is a type of an industry or any major tech, especially if you're looking at cryptos, if you're looking at RPA, if you're looking at some other major technology, there will be a lot of R&D cost associated with it. The better the R&D, the better will be the products. Better the products, the more the usage of those products, the more user acceptability will be there, right? And these kind of firms break even very quickly, right? So from that angle, if you actually take a look at the best RPA firms, right? If you take a look at the best funded firms for RPA, you will read that currently UiPath, that is a good proxy for success as investors are looking for, blah, blah, blah. That UiPathway has raised approximately $2 billion, right? The second well-funded company has not even raised 50% of the funds that UiPathway has raised. Now, why are they raising so much money? Because they need to do the R&D. That is very important for them. If you invest in this phase, this company has the potential to become a monopoly. That is what I am betting on. So I hope you like this discussion, and let's move on to the final stock. So the final stock in which I am investing is Airbnb. Now you can take a look at history of Airbnb, right? It was when it started, it was trading at $144. It's at $163. It had cut its peak at $216. So this, according to me, is one of the safest stocks, so to say. Why? You just take a look at the financials of this, right? Read from right to left. Now, what are the revenues? Are the revenues going up? Yes, right. So in 2021 also, despite the pandemic and everything, and we know how Airbnb operates, it's essentially a platform. I did not explain the business because you folks understand what Airbnb is. So Airbnb, essentially, instead of booking a hotel, you go and book someone's house, so to say. And it's a wonderful model. I personally use Airbnb all the time. So I'm a user of Airbnb. I have liked the experience. So I understand from that angle that, you know what, Airbnb is a good, stable company from that angle. Now, the good part is that, hey, a pandemic-like situation has not hurt. Of course, it has hurt Airbnb, but it has not literally demolished a business like Airbnb. There are certain businesses in India, for example, PVR. The stock prices have crashed a lot for that. But for Airbnb, that has not happened yet, right? And if you actually take a look at the revenues for Airbnb has actually gone up, right? The gross profits have gone up. If you compare it to 2019 levels, the gross profit is up. And traveling has not even started yet, right? It hasn't come to its full boom, right? So the moment traveling is up, I'm quite confident this stock price, which is trading at 163, it will definitely cut its previous high, which is $216, $217. So there is a good amount of money to be made in this stock, even from a swing trading perspective. So I hope you enjoyed this discussion. Now, in summary, I will say a few quick points before I close out the video. Very important for you to listen to this. So the first key point, that I am personally investing in the US stocks from diversification point of view, because my portfolio is big. You can definitely take a look. You can invest. Even if your portfolio is small, you can invest. That's not a problem. Number two, my goal of investing in the US is that I'm looking to invest in companies that can become monopolies, right? So therefore, I'm making investments from that angle. That is two. Third point, if you watch video 1 and video 2 in combination, you will realize that I'm not investing in FANG stocks. I personally believe that there has been a lot of run-up that has happened due to the liquidity-driven rally. Please watch my videos. You will understand that point more. I've given some finance gyan here, but I hope you understand the point that I'm not investing in FANG stocks because of the liquidity-driven rally. And final, in closing, if you're debating between which market should I invest, US or Europe or India, all this, please don't stress too much about it. The goal of investment is always to invest in good companies. That is what you should be doing. That is what even I am doing. Invest with a certain goal in mind. For example, if I'm investing in India, what am I trying to do? I'm trying to generate growth from mid-cap, small-cap stocks. And if good large cap stocks are available at decent prices, I'll go and buy them, right? This is my strategy. I'm not saying that you should also follow this. Follow your own strategy. I'm invested in large cap stocks already. So whatever new buying I'm doing, I'm mostly doing it in small cap, mid cap in India. Why? Why? Please type out your answer. The answer is that we are going to witness a bull run, or we probably are in a bull run in India. That is my assumption. So small cap and mid cap, good companies will skyrocket in the next 10 years in India. So that is the assumption. Similarly, if I'm going to the US, what is my goal? My goal is that, hey, pick up companies in the US that can become global monopolies. Therefore, I have picked a company in crypto, Coinbase. Then I have picked a company in traveling, which is Airbnb. Excellent tech company, can become a monopoly in that space. I have picked Shopify, which helps small businesses thrive, market leader in its space. Finally, I have picked UiPath. New technology, risky, yes, but if this technology kicks in, right, this stock will grow 10x, right? So that is the intent with which I am doing investing. I hope you learned some key things from this video. Do let me know in the comment section. Do give it a thumbs up, helps a lot with the YouTube algorithm, and I will see you the next time.